First session we have here, which we're very excited for, is with our guest speaker, Catalina Dabija, Senior Manager of Deloitte Consulting. So this will be focused on digital banking maturity and how banks are responding to the digital revolution. Before I pass it over to Catalina, I wanted to give a quick intro. Catalina has over 10 years of experience leading and delivering IT projects. And then she's really had a strong focus on specific types of topics like IT and BI assessments, PMO frameworks and ways of working, core banking transformation and merger, as well as process and project management. So she'll bring that strong knowledge to your presentation today. I'd like to introduce Catalina, and I'll pass over to you, Catalina, to dive into your presentation. Very excited to have you here today.
Hi, team, and thank you so much for having me today, and thank you for the introduction as well. My name is Catalina Dabija. I'm a senior manager in Deloitte Consulting Romania, and in our today's session, we will be talking a bit about digital banking maturity in 2020, trying to answer the question how banks are responding to the digital revolution. So without further ado, I will step right into the topic, and even if it's a bit counterintuitive, I would like to start with the part related to key takeaways. So these are the main messages that I would like you all to take away after the end of the session. First of all, let me give you a bit of details about what the digital banking maturity is. So it was a study that we have been conducting since 2016. In 2020, we've done it covering 318 banks from 39 countries. So it's a global perspective, while doing analysis of digital retail banking in 3 channels. We covered internet banking, mobile banking, and website. It's based on an outside-in mystery shopper assessment of the digital functionalities of the customer needs research and user experience evaluation. So all in all, the topic that I'm going to talk to you about today is digital banking maturity, which is identifying champions and leading practices worldwide. Now, we all know that 2020 was, let's say, a tough year, and it has changed the face of industry in general, of business in general, and it also has affected banking. And in terms of digital channels, it was putting the development of the digital channels on a fast track. So in turn, banks had to close or even shorten the opening hours of branches, but many also got to implement new digital features like fully digital processes. Now, when it comes to digital champions, and I'm going to get to quickly defining them in the context of digital banking maturity in a couple of minutes, they don't only lead their peers in number of digital functionalities along the customer journey, but they are also, if those are incumbent banks, they outperform other incumbent banks in their country or in their geography, both on cost-income ratio and return of equity. When it comes to serving online customers, digital champions are investing in end-to-end digital sales processes, and they have widened the lead over the latecomers for key products like current accounts, credit cards, and for cash loans. Also, if we're looking at the market from the perspective of challenger banks versus incumbent banks, new functionalities typically gain traction faster with challenger banks than with the incumbent banks. So we speak here about functionalities like bill split, virtual debit card, chatbots with advanced use cases, or even chatbots which allow transactionality. Last but not least, user experience is a key differentiator, which is bringing up customer satisfaction, and digital champions have long ago understood that. So 60% of our digital champions are actually ranked in the top 10% when it comes to user experience scenarios that we have analyzed. The largest gap between digital champions and the latecomers is in the areas of opening an account, buying an insurance product, or even in the beyond banking services. Now, just as a quick, let's say, look over when it comes to what happened in 2020, there were a lot of, let's say, lockdowns which were instituted in all the countries. So immediately after those social lockdowns, we were faced with the need to go towards remote working. People were finding themselves in the inability of paying their loans. So a lot of countries then adopted loan default legislation. Companies in general were forced to optimize their supply chain processes and in general do the automation of their processes. In the economic side of the middle of the last year, interest rates were reduced in order to, let's say, support consumption. Banks were starting to feel a bit of obstacles in gaining profitability. So they also went, in terms of operating model transformation, they went to the phygital concept, which is a hybrid between physical branches and digital channels. But also there was a lot of forecasts talking about global recession. And all in all, what happened is that companies in general were forced to a fast track in terms of digitalization. Now, we all know that there were several restrictions which were imposed by COVID-19. So I was mentioning in the beginning that 60% of the banks had to close or even shorten their opening hours. 11% of the banks turned off specific methods of account opening, and even 6% of the banks suspended altogether account openings or just limited access to a specific type of product for the new client. However, this was only one side of the last year. On the other hand, banks had the opportunity to bring out new functionalities, and I'm going to mention just a couple of them. So more than 40% of the banks actually decided to increase the limit of contactless payment. More than 30% of the bank started to implement fully digital processes, product opening in specific. And last but not least, what I want to mention is that almost a quarter of the banks started to introduce booking appointments in branches, and that was because they needed to optimize the time spent by the client in the branch itself. So in that area of, let's say, the entire perfect storm, which was created last year, we tried to bring the digital banking maturity study as, let's say, a tool, as a global accelerator to help banks to respond to the change. Just as a quick set of numbers that I want to give, I did tell you about 39 countries that we covered, 318 banks. We looked at a customer journey across 6 steps, and you will see them in the next slide. I'm going to tell you a bit more about them. 3 digital channels and over 1,100 functionalities that we covered. Now, I need to tell you a bit also about how we splitted the results, because all those 318 banks were divided into 4 main categories. So at the bottom of the curve, we started with the latecomers, and then digital adopters was, let's say, the next category of banks, and then smart followers. And at the top of the curve, we have the digital champions. Actually, the digital champions are defined as top 10% of banks. And you could ask yourself, what does it define being a digital champion? What does it mean? So digital champions, they offer a wide range of functionalities. They are relevant which are relevant for customers, and they offer a compelling user experience as well. So they end up setting digital key digital trends, and they have this leading market practices, which actually turns them into examples to learn from. So now let's go into the exact numbers, because that is where the fun part begins. We looked into what digital champions offer in terms of functionalities, and you can see that in the last column, in the 4th column, and we also depicted all the other, let's say, groups of banks. We started from the latecomers, went to digital adopters, and then to the smart followers. And we tried to look at it across the entire customer journey. I did tell you that there were 6 steps that we analyzed. So we started from information gathering, we went through account opening, customer onboarding, day-to-day banking, expand relationship, and end relationship. And I must give a note here. Usually ending a relationship is one of the, let's say, areas of the customer journeys that the banks are overlooking, or let's say, not allocating enough resources or enough attention to that area, but it is a key important point for our clients. Now, we tried to look at what was the, let's say, gap or the advantage that the digital champions had over the latecomers. And you can immediately spot that in the area of expanding relationship, they do a lot better than all the other, let's say, banks which were part of the study. Now, going further, I do want to give you a bit more insight on where have digital champions gained their biggest advantage over their peers in the last 2 years. So I did say that the expand relationship area is all in all about 13 percentage points higher than all the other type of banks. It's been a top priority for digital champions, especially when it comes to, let's say, areas like partnership ecosystem and account aggregation, which is the highest rank of difference between the digital champions and the other peers. It's 16 percentage points. But not only in the area of expanding relationships, the digital champions have looked into how to gain an advantage. They also looked into account and product management, and you can see that here in the account opening area with 15 percentage points, but also in the PFM area. And I would like to give a bit more details on the PFM area, just as a quick note. So digital champions, they actually deliver more value-added PFM than all the other banks because of two things. First, it's the engagement drivers, because they have functionalities like setting financial goals, managing transaction categories, or budget notifications. But secondly, also due to cross-sell boosters, because they have functionalities like saving and investing advice, contextual offer, financial projections, and last but not least, measuring financial health. So all in all, when we did the math, it appeared that digital champions offer 5 times more functionalities than digital latecomers, for example, when it comes to PFM. Now, I did select only 3, let's say, categories to be talking about when it comes to going into deep dive. So I selected the opening process because that's a very important part. I have selected the beyond banking or value-added services and the investment services. So let's go into the first topic. The mobile channel was looked at versus the internet channel. So those are, let's say, the biggest acquisition hooks, or the biggest areas which are important for the clients when it comes to end-to-end digitally serving our customers. So we looked at internet channel, and we have found out that there was a 38% percentual points difference between digital champions and digital latecomers, but the biggest gap was in mobile channel. So it was almost inexistent. The type of functionalities that the digital champions were providing, they were not existing in the digital latecomer, so at the beginning of the curve. Now, I must say that the data is part of the 2020, let's say, study. We are approaching 2022, which is the year that we're going to redo this, and I'm sure that this area of focus was taken into account in the context of the pandemics by most of the banks. So we will see probably increasing percentages in terms of mobile channel functionalities in the upcoming year. Also, just to give a quick, let's say, information about which is the preferred method when it comes to opening a current account, because you need to do know your customer, validate the identity of the customer. So what is the preferred opening method when it comes to digital champions? More than half of them, they prefer picture of the ID card. Almost a quarter of them, they do video conferencing or showing an ID to courier, or even a combination of those. And let's say even with a lesser percentage, they also have functionalities like e-signature, or like authorization via login to another bank, or even, let's say, penny transfer. Now, when it comes to the second area that I wanted to focus on, which is the value-added services, it's another source of significant differentiation for the champions. They don't yet play a critical role in the customer value proposition, but they do differentiate banks from traditional banking services, so they can be leveraged as acquisition hooks. We live in the world of low interest rates, so banks are seeking a shift from interest income to fee-based non-interest revenue. So these services can help banks that successfully monetize value-added services potential. Now, in the chart on the right-hand side, you can see, let's say, top 4 types of functionalities granted or given by digital champions in comparison with digital latecomers, starting from high differentiation potential up to low potential for differentiation. Now, I'm going to start with the bottom part. In the public service area, digital champions offer functionalities like applying for social benefits or checking social insurance status. In the entertainment area, they offer buying tickets or buying tickets for cinema or for like social events. In the mobility area, they allow buying parking and transport tickets, or even booking hotels, flights, and trains. In the auxiliary services, they went into cloud storage functionalities and credit scoring, which is important for clients. And in the commercial area, you will see that this is the area where the gap is the smallest between the digital champions and the latecomers, but they do have more functionalities when it comes to loyalty programs or mobile phone top-ups. Now let's go a bit to the third area that I wanted to deep dive when it comes to digital channels. Again, we looked at the, let's say, most preferred and least preferred channel to open an account or to open a product. So we have seen that the most preferred channels are the digital channels when it comes to transactions and savings, so products in those areas like debit card, credit card, current accounts, and channels like these digital channels are less preferred when it comes to credit products. However, this is exactly where the digital champions are becoming leaders by building an advantage versus their peers. So you can see that in the credit area, products like cash loan, overdraft, or car loan, in those areas, and also in credit card, in those areas, digital champions offer 2 to 3 times more functionalities than all the other peers. Last but not least, as I said, also in the key takeaways, user experience is, let's say, a key important aspect when it comes to considering a bank as being a champion or not. So champions do deliver best user experience, especially when you look at account opening, where you see 48 percentual points difference, transfer, where you see 25 percentual points difference, and buying a credit product, where you see 30 percentual point difference. I'm sorry. It's always a hard thing to say. I also wanted to give just a quick insight in this area. So, for example, if we're looking at this account opening, providing customers with guidance and positive user experience during the account opening is essential, because you make a positive first impression which lasts with the client. So you can offer functionalities like facilitation of entering data fast and correctly, progress tracker, which is, let's say, a no-brainer, but this is what digital champions always offer. Descriptive error messages, save and finish later feature, or even confirmation that the form that the client is on is being processed. All this type of features is what is helping the digital champions to outperform their peers. As a summary, or let's say as a wrap up, I would like to say that this kind of study can help both champions but also latecomers to future-proof their digital strategy. And if you're asking yourself what's in it for your bank, then I would like to emphasize 3 points. First of all, you can know what the digital maturity is for your retail banking channels. You can gain insights into the positioning of your individual bank in comparison to the local leaders, global leaders, and to identify the key gaps. Secondly, you can identify leading market practices at a worldwide level. You can identify or learn about the latest trends and developments in the digital retail banking channels. And last but not least, you can understand the importance of user experience for customers. You can examine how specific features or functionalities are helping to improve customer satisfaction. And with that, I am wrapping up and I am opening for questions. So please.
Thanks a lot, Katalina. And I know we have a minute left. I'll ask one question before we move on to the next session. So the last question that we have here that I think would be good is, just in summary, why would you say banks have to invest in digital transformation at all? And how would you sum up why it's so important for banks to really focus and invest in transforming digitally?
I would say that it's not about digital latecomers or digital champions. Even at this point, everybody is investing in a digital channel. It's about how much you are investing and how much that strategy is actually aligned across channels, across the entire organization. So we are currently living in the new normal. The absence of digital channels, it's a no-go. You will go in the Kano model of satisfaction, you will go to the dissatisfaction of the clients. It's not even about satisfying clients or getting to the point where they are, let's say, happy and they're promoting. It's about not having dissatisfied customers.
Perfect. Well, thank you very much, Catalina, for your time. We really appreciate that. It was an extremely insightful session, and appreciate everyone on the line as well. But thanks, Catalina, and we'll be moving on to the next session here shortly. But really appreciate your time.
Thank you so much, guys.